Another tough week for buyers as mortgage rates, well, they went up to 7.5% in a blistering response to the retail sales figures and Jerome Powell's crisis of confidence in the inflation coming down. Hi, this is Mike Wise with your weekly mortgage update. Fannie and Freddie, they came out and addressed the NAR settlement, and that address was basically their identical policy. The bottom line is this, is that if sellers offer to pay the buyer's agent's commissions, those payments will not be treated as interested party contributions, and therefore not part of the percentage cap on seller contributions. So it's the same policy. This is exactly where we thought they were going. We just have to wait for FHA and VA to come out with what they're saying, and more information to come on this. Retail sales for March, it was much stronger than expected, rising 0.7% month over month. Market was actually expecting 0.3%. In addition to that, the February retail sales were revised up to 0.9%. So basically that was another gut punch for the bond market. So following last week's gut punch of the jobs and inflation numbers and the strong retail sales figures, that brought even more pain to the bond market. The 10-year Treasury yield, it went up to 4.6%, and the 30-year fixed rates, as I said in the beginning, went up to 7.5%. And Powell's loss of confidence, that was a huge thing. He basically said, recent data has clearly not given us greater confidence that inflation is under control, and instead indicates that it's likely to take longer than expected to achieve that confidence. That is, in the lower inflation. So the rate cuts, well, they've gotten priced out here. Maybe they're going to go down to one or two increases or one or two decreases this year. So here's the implied probability of a Fed rate cut on May 1st, 2%. How about June 12th? Well, that's at 15%. July 31st? Well, that's at 41%. You have to go all the way out to the September 18th meeting to get a better than 50-50 odds for a rate decrease. Builders, well, their confidence stalls as well. The National Association of Home Builders Confidence Index was flat at 51 in April. Basically, that had risen each of the last 4 months. Basically, the buyer traffic component index continues to drag that overall index down, and the current sales expectations and future sales expectations, they are still well above the 50 break-even point. New home activity slowed. The total housing starts fell 14.7% month over month to a seasonally adjusted annualized rate of 1.32 million units. But within that, multifamily starts, whereas 5 or more units, that actually plunged 21% month over month to a rate of 290,000 units, the lowest figure since 2017. Existing home sales, well, that stayed pretty resilient. The March existing home sales, while it dropped 4.3% month over month to 4.19 million, that was pretty good considering that average 30-year fixed rates were on an upward trend in February and March. So this is a reasonably strong result. The median sales price, it actually rose 2.3% month over month in March to $393,500. Keeping in mind that is a national number. The activity levels, well, they're warming up as well. So the Realtors Confidence Index for March saw first-time home buyers being more active. They were 32% of the overall sales. We also saw the competition going up. There was 3.1 offers per home sold. That was an increase. In addition to that, 29% of the homes sold above list price. And they were actually faster sales. So the days on market, it went down to 33 days. So this is normally a seasonal phenomenon, but the increased demand, despite the higher rates, is really impressive with that volume. So, investors, well, they're staying very, very active. According to CoreLogic, 29% of the single-family homes sold in the fourth quarter of 2023 were purchased by investors. That is a new percent record, but it doesn't mean that investors are buying more units. The activity levels have shrunk for all buyers on a relative basis, but investors, they've stayed more active. Renting forever. Well, there was another survey by Redfin that basically 38% of renters said that they may not ever buy a home. That's up from 27% last year. So why such pessimistic? Well, the high home prices, difficulty saving up for a down payment, and higher mortgage rates. Sound familiar? Well, don't forget CMG's Home Fund It program, where you can save money through a crowdfunding source. In addition to that, this week, there was an article in the Wall Street Journal regarding insurance, or the hidden costs of home ownership. And basically, this is saying that the increase in insurance premiums, it's across the country, and basically is now more than like half of the total cost of home ownership. Another thing that I wanted to go over was built for rent. This is an apartment list, basically report, and 9% of the single family homes that were started in 2023 were built for rent. A decade ago, that figure was at 4%, so we're going up double here. But here's the issue of the rising build for rent homes. It actually makes the inventory situation worse for the would-be first-time home buyers. The National Association of Home Builders estimates that the U.S. housing market is short 1.5 million single-family homes. The Realtor Confidence Index for March, well, every month NAR surveys the realtors and asks them for a combination of hard and soft data. The results of this Realtor Confidence Index are released on the same day as the existing home sales figure. And I consider this a very useful gauge of competitive ferocity. The first-time home buyers, they can't wait any longer. Probably the most important data point for March was the rebound in the first-time home buyer participation, which was the 32% that I talked about. Over the previous months, the percentage of all cash, no mortgage deals had been rising, crowding out the first-time home buyers, but that reversed in March. I know this was a long update. I appreciate it. Hopefully you have a great weekend. A lot of good information, a lot of charts below for you to take a look at. If you have any questions, please feel free to reach out to me. Send me a text, shoot me an email. I'll be back to you, and we'll see you next week.